Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Hey, it's the week before the December Fed meeting here in 2025, and I want to get into essentially the idea that it's a bit more divided Fed than we're used to seeing. There's going to be probably a little bit more debate than we would normally know about or hear about in a Fed meeting. And honestly, some of the futures markets have really moved around a little bit. At the end of the day, this wide range of views centers on the Fed's dual mandate, the idea of maximum employment and stable prices. So on one hand, there's risks that Fed officials are worried about around the softening job market. And then, of course, there remains some concerns about inflation and whether inflation will remain elevated above the Fed's 2% target. So, for example, San Francisco Fed President Mary Daly, she supports a cut, emphasizing that emerging softness in the labor market is an issue. In contrast to that, Boston Fed President Susan Collins sees, quote unquote, no urgency for action, noting restrictive policy may actually help with the still firming inflation. So again, we'll see where things land, but let's jump into it in just a little bit more detail. So again, when we think about the Fed's dual mandate, it's stable prices, and that's been defined by them to be targeted inflation at 2%. We've been a little bit above that. And then the second element of the dual mandate being maximum employment. Really what that relates to is just a labor market that's not overheating and also not softening too much. Now, even though we've seen some cracks in the labor market, basically things remain reasonable. They're actually kind of tight by historic levels. And there's data, take, for example, the unemployment rate at 4.4%, signaling that we're pretty darn close, if not at full employment. Now, as it relates to inflation, inflation has run still above the Fed's 2% target. So one of the favored indices that the Fed watches is the Personal Consumption Expenditures Index. It's known as the PCE, and they actually like to look at the core. So think in terms of excluding food and energy. Anyway, the punchline here is that when we look at the last reading, was up almost 3% year over year. Still well above the Fed's 2% target, but also at the same time quite a bit below the peak, which was in 2022, when that annualized rate got to 5.6%. Now, another thing the Fed looks at are inflation expectations. What do people think looking forward? Now, investors, we get to see what investors think through what are called break-even rates, basically a differential related to nominal bonds and inflation protection bonds. You're able to measure that and infer that investors are assuming about a 2.2% inflation rate over the next 5 years and let's say the next 10 years. And so that's not quite at the Fed's 2% target, but pretty darn close. And then consumers, we learn about their view on inflation through surveys. And for the very long or medium term views, basically the view is that inflation is going to be somewhere between 2 and 3%. It's still a little bit elevated, right? And so think of it as, this idea that the labor market is showing some cracks, but still at full employment. Inflation still seems a little teeny bit firm. And so honestly, looking at the data, you would think, oh, well, maybe the Fed will hold here to see if inflation can cool a little bit further. But the punchline is that's not what markets are projecting. So even though if we go back to I think it's the third week of November, specifically November 19th, the probability of a cut at the December meeting fell to 30%. And that actually sort of coincided with a softening in the equity market, but really based, I think, mostly on commentary from the Fed. Essentially, that probability has jumped back up, and last I looked at it, it was up well above 80%, kind of approaching or around 90%. And so the basically investors at this point have quote unquote priced in a quarter point cut at the Fed's meeting in December, which again, by this recording is going to happen next week. So listen, that's what I wanted to share as like a little pre-Fed meeting update. And, the issues to me are kind of interesting because we are interested to see inflation come down a little bit further. And, a lot of folks are thinking that the current elevated level is just sort of a one-time tariff impact. But anyway, obviously, if the Fed does cut, they're saying that the labor market protection is sort of higher on their list a little bit. And so that'll be interesting to see. Anyway, thank you so much for taking the time to listen to this episode, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.